Hi, welcome out to Tackle Trading's Technical Analysis 101 on the art of the reversal. My name is Coach Matt, and I am way excited to be with you guys here tonight as we talk a little bit about the art of the reversal. And for those of you who know me from the halftime report or from Tackle Trading in general, you'll know I put a lot of thought into technical analysis, and we in the halftime report we call it tracking the reversal, as we'd like to. It's not only us at Tackle, but everybody likes a good little old-fashioned W formation, head and shoulders formation, and the newly minted reversal analysis called the V-shape recovery. And for those of you who do not know me, my name is Coach Matt Justice. I am the CEO of Tackle Trading and one of your coaches over there at Tackle Trading. And by way of introduction, I am an entrepreneur, trader, and investor. I'm the founder and the host of the Trading Justice podcast. Definitely check that one out. Got a new one coming out tomorrow with Coach Tyler from Tackle Trading. But in my heart, I'm an educator. I'm a coach. I'm a mentor. And obviously, I am one of the founders and CEO of Tackle Trading. And once again, I am very excited here tonight to introduce to you guys. To many of Tackle Trading, this is going to be a review. You understand how to read a chart and track reversals as much as the next one out there, but we're going to have some fun. And for those of you who are very new to the art of trading and investing, reversal analysis is so very important because we see them all the time. You have short-term reversals, you have intermediate reversals, then you have those big macro reversals that happen on weekly charts. We're going to be tracking just the process of the reversal and really diving into the understanding of the step-by-step analysis that we'd like to look at in tracking reversals. But before we get into that, just a nice little advertisement from our amazing host in Tackle Trading. First of all, Tackle Trading is a community of like-minded investors and traders all navigating the market together. And, we put out a tremendous amount of material for our community, everything from reports, trading reports on the weekend, blogs all the time. We have about 15 different trading shows we do on a weekly basis. We got courses galore for everybody, from very basic information to some really advanced trading systems out there. And if you guys need anything from Tackle Trading, you can always hit us up at team@tackletrading.com. But you can always get a free trial and test out all the great things of Tackle Trading by going to bit.ly/jointacklepro, and you get a 15-day free trial, and you can talk to one of our coaches one-on-one in a consultation to understand everything you get as a pro member of Tackle Trading. But let's focus on tonight and what we're here to do, and that is to understand a little bit more about the art of the reversal. And what I'm going to, kind of the story, and as many of you know how I kind of go about teaching, is I tell stories over time. And that's all technical analysis is. Once you really understand how to read a chart and you understand the mentality of the buyers versus the sellers. Hey, what's up, Matthew? Of the understanding of the buyers versus the sellers, all you're really understanding is the story of demand versus the supply, the story of bulls v bears, the story of upward movement in price versus downward movement in price. And we're going to start understanding at the end of a trend what occurs. And that's where reversals live, is at the end of a trend. Now, simply because a current trend ends does not mean that's guaranteed to be a reversal. So I do think it's very important to understand the key differences between what's called a continuation pattern and that of a reversal pattern. And even though they are subtle differences, and I mean they are very subtle differences, those differences mean a tremendous amount because it tells you who is actually controlling that price action in the long-term story of the buyers and the sellers, or what we like just to call the bears versus the bulls out there. And when you think about reversal analysis, it's really understanding the different types of patterns that have a tendency to develop at the end of a trend, whether that is a bullish trend or a bearish trend. And we're going to start understanding the V shape, the W shape formation, and then the traditional head and shoulders formation as well. And it's not just in terms of understanding the picture, because we can all see the picture at the end of a pattern. It's understanding the process, that step-by-step process in what creates these patterns so that you can be prepared. And, I was in the halftime report today, and I can't even remember what we were talking about, but me and Mark were just Coach Mark were just kind of talking back and forth about technical analysis. And I said, some of the best trades, you're lining them up weeks in advance, because understanding those step-by-step formation takes a little bit of time. It's not about hearing, oh, I got a trade today, let me go make a trade today. It's about being prepared for the future so that you are ready to take action. Now, when it comes to, and I can't wait till somebody corrects me and tells me Mark Twain didn't say this, but I'm still going to get the quote anyways. History doesn't repeat itself, but it does rhyme. Traders are programmed in pattern recognition, legitimately just programmed in pattern recognition. When you're learning how to read a chart in the very, very beginning stages, you'll hear me talk about constellations and looking up at the nighttime sky and recognizing patterns out there in just life in general, because pattern recognition is in our DNA. And so as a trader, when we see and identify a pattern, our belief system is that pattern is going to repeat itself over and over and over again until the pattern changes. And so it sometimes can be fairly difficult to understand the end of a trend, given the fact that the end of the trend is the end of a collection of different repeating patterns, of which is literally built into our DNA as human beings. And we are trained as market assassins from a pattern recognition perspective. So being able to identify when these patterns do in fact change is really the beginning part of reversal analysis. And so when you're dealing with a bullish uptrend, for example, and many of you at Tackle Trading understand the basics of trend analysis, but when you're dealing with the basics of trend analysis, it's simply a repeating pattern of higher highs, higher lows, where the buyers look to buy at the low price, the sellers look to come in and lock in some profit at the top side. And this pattern has a tendency to repeat itself over and over and over again. And so as a trader, when we see this repeating pattern, we just buy at support, sell at resistance. And when you're looking at it from a bullish uptrend perspective, you got this higher high, higher low, higher high, higher low, higher high, higher low. And this pattern can last for a month. It can last for 6 months. It can last for a year. It can literally last for a day if you're looking at an intraday chart, but it's not about the matter of time it takes in the pattern. That's up to consumer who says, oh, I should have bought 6 months ago. It's about what's happening today for the trader, but it's an understanding of what changes in the pattern to create the end of the trend. And so when you're looking at the pattern, higher high, higher low, higher high, higher low, understanding that pattern and that repeating pattern is extremely important, because once again, we're looking at the basically the 1, 2, 3 pattern. 1 is the breakout, 2 is overextended, 3 is the retracement. And so we just trade that pattern over and over and over again. So having an understanding at the end of a trend is also extremely important. And what I've done here, ladies and gentlemen, is I got myself a nice little blackboard. And I created a little bit of a chart, and I'm going to do some drawing here tonight so that we can understand what the process in a continuation pattern versus a reversal pattern. And so let's understand that first and foremost. And so when you're looking at a bullish uptrend, once again, it's simply a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And as long as that pattern repeats itself, we're simply going to come in and say, all right, as support, we want to buy, at resistance, we want to sell. Well, the first thing we want to truly understand in a reversal is what happens at resistance in a bullish uptrend, or what happens at support in a bearish downtrend. when you're looking at the trend from a historical perspective, you see what happens at resistance to create the higher high is you break resistance. You have this constant breaking of resistance, like you're walking up a set of stairs. You have an increase in support, an increase in resistance. And so as long as resistance is violated and we establish a new higher level of resistance, well, what that's going to do is continue the pattern, continue the trend. So if resistance in fact holds and we double top, that is what the really kind of the end of the trend is. And so what I want to talk about right now is simply, and not before we even get into the reversal analysis, because it's a little premature to get into reversal analysis simply because resistance holds in a bullish uptrend, and it's a little premature to get into a W formation, for example, on the downside, simply because support holds. It's the first step, not the last step, because what's important here is as you track a reversal, whether it's an M or a W, an inverted head and shoulders or a head and shoulders, or a V or the inverted V, it really doesn't matter. When you were first going into the pattern, you do not, and this is the crazy part, this is a little bit of the difficult part of trading. You don't know if it's a reversal or a continuation. The only thing you know is that resistance held. The only thing you know is that the previous trend is now over. You do not yet know if it is a continuation pattern, which would continue the previous trend, or if it is in fact a reversal pattern. And so when you're looking at this from in terms of just the pattern changing, a continuation pattern, and you have multiple different types. You have symmetrical triangles, you have ascending triangles, you have the cup and handle formation, right? So you have these different continuation patterns, but they all start with resistance holding. And so if the market comes down, you have that double top, which obviously violates and changes the previous trend. But is it a reversal yet? No. It is not a reversal, because the reversal is an understanding of the relationship between support and resistance. If resistance holds, and think about this as a battle. Think about this as a fight between the bulls and the bears. And in that fight, what you're really trying to understand here at this point is who still controls the price action, right? Who controls that price action? Simply because resistance held does not mean bears now control. What is important to understand is the difference between a continuation and a reversal pattern is what happens at support. So for example, it is at this point right here that is important in the reversal, because if this level of support forms and you create a higher level of support from the previous one over here, that is a cup and handle formation, which is a very, very powerful continuation pattern. On the flip side, if you go back to that pattern holding, on the flip side, if you see that pattern come all the way back down, you now have an M formation, which is one of the most powerful levels, powerful reversal patterns. And so the difference is very, very subtle, but it's extremely important, because what it tells you is it tells you who's controlling price. Is the bears controlling price, or is the bulls controlling price? Is this just a continuation pattern, or is it something I need to be a little bit more concerned about in terms of a reversal pattern? Now, once again, the importance of it is what occurs at that support level, because at that support level will change it from a continuation pattern if it increases versus a reversal pattern if you come back down into a support level. And so once again, the formation here is extremely important, because in terms of a bearish reversal pattern, if support increases as the stock market is going up, that's not a reversal. That is a continuation pattern, and one of the strongest continuation patterns out there. It's if support now comes back down to the same level. For example, let me get rid of that. If support comes down to the same level, as you can see, like in terms of that, all of a sudden that is an M formation. And in that M formation, that's a reversal pattern. And so once again, understanding the difference between continuation pattern and that of a reversal pattern is extremely important in the analysis. And so when you're looking at reversal patterns, there are step-by-step approach to the reversal pattern. And what I want to do is I want you guys to write this down. Okay, there's 5 steps in the reversal. I want you to write this down. And then what we're going to do is start to understand them from a price action perspective. I'm going to be doing some more blackboarding here in a second, just in terms of drawing, because I do think, by the way, if you want to master the art of pattern recognition, go draw a million different patterns. It'll get your muscle memory where it needs to be. But in terms of understanding in this webinar, the first thing we're going to do is go through the 5 stages of the reversal. We're going to then identify them from an understanding, a learning, and educational perspective. Then we're going to go to the market, and I've got 5 or 6 stocks. We're just going to rapid fire, and I'm going to ask you guys a question. We're going to make this interactive. You guys ready to make this interactive? Who here's ready to make this interactive? I'm going to ask you guys a question. Is this a reversal? Is it a continuation pattern? And what type of pattern is it? And so in the 5 stages of the reversal, and what we're looking at here is an M formation, but real quick, all patterns have these commonalities to them. So the subtlety is actually within the pattern, but once again, understanding all reversal patterns have these common traits in them. And so the first step we want to understand is slowing momentum. I was asked just recently, what's the most important concept in terms of technical analysis that I believe in? And it is absolutely support. There's not a close second. If somebody asked me today, if they asked me a month from now, if they asked me 10 years from now, if somebody asked me the most important concept in all trading, I would say understanding support. That number one, okay? Momentum is the second one for me, though. In terms of all of my analysis has momentum analysis in it, whether we're talking about the intraday analysis, whether you're talking about the understanding of the different categorizations of candlestick analysis, when you're looking at trends, patterns, you name it, momentum plays such an important role. And it's that old mantra of things in motion have a tendency to stay in motion. Well, if something has momentum behind it, there's a reason for that. You may not understand exactly what that reason is, but the visual identification is literally showing you that momentum. It's like if you're watching a basketball team and they're up 2 points, and then all of a sudden they're up 10 points. I'm willing to bet they had a little bit of momentum there. A little things went right for the NBA team. So in terms of momentum, we need to understand momentum specifically from a trend perspective. So the first thing we need to understand is the concept of momentum. And there's a couple different ways you can track momentum in trend. One is from resistance to resistance, or R1 to R2. The other one is the wavelength, and I'll get into both of them here in just 1 second. The second thing we typically see in a reversal is what is called a double top. Obviously, that would be a double bottom. We're tracking a bearish reversal here. The exact same metrics and understanding happens in the W's or at the bottom of the chart. Just this is an example of an M formation. So the second step we'd like to look at is what is referred to as a double top. Third, which creates the reversal, is that of a double bottom. That's when you see horizontal holdings of resistance and horizontal holdings of support. What that tells you is nobody has an edge. At Tackle Trading, you'll hear a lot of us reference the K-trade scenario. And the K-trade scenario is when we're in the middle of a reversal or a continuation, and we don't necessarily know one way or the other. Nobody really has an edge. Nobody's really controlling price action. It's understanding that you got to wait for the breakout. You wait for the breakout on resistance, you wait for the breakout of support, but that's because you have a horizontal resistance levels that have been multiple confirmed. You have horizontal support levels right here as well as right there that have also been confirmed. Now, what confirms the reversal is when that horizontal level of support right there, confirmed right there, is finally violated, and you see that breakdown of support right there. That violation of support is step 4 in the reversal. So it starts with slowing momentum. It then ends in terms of the confirmation of the support break. And then this is it in terms of reversal. because at this point, you now have a bearish downtrend. You have bears controlling price action. If you're looking to buy in the face of a bearish breakdown, you're looking at buying in the face of climbing an entire upward, an entire mountain of price action coming down on you. A lot of sellers there, not a lot of buyers. You don't really love your edge in that capacity. And so this is the confirmation. It is over at this point. The last step, though, is very important, and it's not really necessarily the part of the reversal. It's just one of the most powerful bearish or most powerful bullish formations you can see in the market. And that would be step 5, otherwise known as the kiss of death in a bearish downtrend, which is the first level of resistance that actually contracts here. And so you see the markets establish a lower low, trades back into the lower high, confirms against the old support, now new resistance. And you see what transpires after that is that tremendous downward movement in price, lower, 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 because at that point after the kiss of death, every trader knows it. Bears not only have the price action, they are dominating the mindset out there, they're dominating the control out there. Buyers don't have anything to hang their hat on, and they're just kind of left out there in the cold until we see that W formation and the exact opposite occur down at the lower end of the price threshold. So what I want to do, ladies and gentlemen, is I want to go through the concepts of momentum here. And one thing I have understood is momentum can be a little bit subjective. However, as a trader, you have to try to remove that subjective mentality, because sometimes, and I was talking to Coach Mark about this on the halftime report today, you stare at a chart long enough, you're going to see what you want to see. Maybe not what you need to see, but you are going to see what you want to see. And I promise you, I've stared at enough charts. And oh, there's a W in there. Oh, if I stare a little bit longer, there's an M in there. Oh, if I stare a little bit longer, I can see a short-term high base. Man, you can see whatever you want to see when it comes to technical analysis. So keep structured, keep that assassin-like mentality, and let the data do the talking. And so when it comes to the understanding of momentum, that first stage in a reversal, it's really important to understand how we track momentum as technical traders. And so let's go ahead and let's understand that. Now, the first step in how to understand momentum is to understand the relationship between pivots. Now, what a pivot is it is a confirmed change in market direction. It's not a one-day downwards, and I'm not here to teach all things technical analysis and the creation of pivots and all the identifications of different support. I'm here to understand, or I'm here to teach the art of the reversal. And so I'm just taking a little bit of leeway in making sure that you guys understand that one downward movement in price doesn't make a pivot. We need historically 3 days down or 3 days up to confirm that as a pivot. But when you're looking at the differences between the momentum, what we're really trying to understand, ladies and gentlemen, is the waves. Now, in a bullish uptrend, this is what my categorization of it is officially. I think in terms of motive wave up, corrective wave down, motive wave up, corrective wave down. You can refer to it as a higher level of support and a higher level of resistance. You can refer to it as a higher high or a higher low. But when you hear any trader say motive wave versus corrective wave, the motive wave is the upward movement in price. The corrective wave is the downward movement in price in a series of overall bullish uptrend. And so the first way to track momentum is to understand the relationship between support, the relationship between resistance and the relationship between resistance 1 to resistance 2. And so if you look for a trend like this, for example, you look at R1 to R2. R1 goes from 115, as you can see over here. R1 goes from 115 to 125. That's a 10-point increase in resistance from R1 to R2. You then go from 125 to 150, which is a 25-point movement up there. And so the first way that you can identify increasing momentum in trend is looking at the vertical distance between resistance pivot, or the relationship between two resistance pivots. And so if resistance is increasing over time, that's an indication that not only do buyers have control of the price action, they are dominating the price action. And just think about, for you active traders out there, how many different themes have we seen track the market over the last 3 months? It's been it's been an amazing time period over the last 3 months in terms of the different themes that really have been driving the market. So if you see a consistent trend over a 3, 4, 5 month time period, it's because the buyers, the bulls, are just dominating it. And it's not because the buyers might have a better edge. It's because the entire market is seeing the exact same thing, and that momentum has a tendency to carry over. Well, we know what the opposite of increasing momentum is. The opposite is decreasing momentum. So once again, the first way to track momentum is to look from R1 to R2, and then from R2 to R3. If R2 to R3 has increased its price performance over the initial R1 to R2, and I know I'm talking a lot of technical lingo there, but I think you understand that is a sign of increasing momentum, and thus the probability is also increased of further price appreciation, or thus the trend continuing, if that makes sense, Team Tackle. Now, the second way to understand momentum in trend is to understand the relationship between the motive waves. And so once again, the motive waves are your your higher low to your higher high. And so what we're tracking is not the increases of resistance, but we're tracking the motive wave, for example. And so when you're looking at this trend here, you have from this support, and once again, you go over here to $100, from 100 to the top end of the wave at 115, it moved 15 points up. Then it went from 110 all the way to 140. It moved 30 points up. And then in the third wave up, it went from 135 to about 148. Well, that 135 to 148, you still have an increase in support. You still have an increase in resistance. What you do not have, though, is an increase in momentum. You have a decrease in momentum at this point. And because you have a decrease in momentum, the probability decreases that the trend will continue. Now, are we still buyers, though? Regardless of momentum, are we still buyers at this support level, regardless of momentum? Are we still buyers? Yes or no? What do you guys think? Increasing momentum or decreasing momentum, are we still buyers at the increase in support? Of course we are. 1000% we are. The difference isn't whether or not we're buyers. The difference is how aggressive we want in terms of buyers. How, if for example, I might do something like a bull call spread, which is a little bit less aggressive than just going out there and buying a call option. Or you might want to scale into a position on the retracement, add to the position on a breakout. You simply will become a little bit more conservative in your strategy selection in a decreasing momentum environment than you would be in an increasing momentum. But in the back of your mind, the reason you're becoming more conservative from a strategy selection or a position size perspective is because of the slowing momentum. Does that make sense, everybody? By the way, once again, we're still buyers at that support level. We're just being a little bit more conservative from a slowing momentum perspective. Now, once again, that is that is part of that reversal. And so once again, when you come into the understanding of momentum, and now my lines are going to be very big there. Okay, I'm back. So when it comes to understanding momentum, once again, you're really looking at the differences between the vertical distance or the increase from support to resistance. And yeah, Ahmed, I like teaching. I don't like regurgitating information from a PowerPoint. I think everybody at Tackle Trading knows how I like to get down in that capacity. Now, downward movement in price, guys, it works the exact same. Once again, one of the most beautiful things about technical analysis is, regardless of a bullish uptrend or a bearish downtrend, the concepts are the same. instead of tracking R1 to R2 in terms of increasing momentum, in a bearish downtrend, what we want to track is S1 to S2. And so as you can see here, S1, meaning support level 1 in the trend, to S2, support level number 2 in the trend, to S3, S4. You see how that goes? Well, as that support levels go lower and lower and lower, you visually see that concept of momentum have a tendency to play out. Well, the opposite of increasing momentum, once again, is decreasing momentum. And as you start to understand that decreasing momentum, what you'll see, and I love this about technical analysis, because for the analyticals out there like me, oh, we can geek out on our numbers. We can geek out on our numbers till the cows come home. We love it. We love it. We love it. We'll micro analyze the differences between a wick versus a body all day long. Love having the conversations. But for those of you who aren't geeks like myself, from a technical perspective, you can see it visually on a chart. You see that slow U shape forming, right? You see that slowing momentum that is visually identified. And so I love that about technical analysis, whether you're the creative type that just loves the visual identification versus the analytic type that loves to get into the nitty-gritty of the detail out there. You can do it both from a technical perspective. And so when you're identifying that slowing momentum, and again, you spend so much time in understanding momentum because it helps you understand where those price levels go next. You once again see R1 to R2 to R3, that slows down over time. That's showing you that the current trend is slowing down. The exact same thing happens on the downside. As you go from S1 to S2 to S3, you see that big downward movement of price by 10 points followed by a $1 contraction. Well, that $1 contraction, it still means the bears have control, but they don't have as much control. Right? We're still losing the ball game, but we're starting to inch back a little bit. We're starting to come back a little bit. That is the concept of momentum. And so what I want to do here is, now that we understand kind of that step one, right, in momentum, now I want to get into what are the three types of the reversal. And so when you're understand step one, right? And step one is momentum. Well, once you've identified the momentum, now we just track the reversal over time. And for those veterans of tackle trading here, you guys see me do this all the time in the halftime report. And so one of the things I love about this webinar and what I'm doing here tonight is when I get into the halftime report, I'm just doing the analysis. You guys know exactly what I'm talking about now. We're speaking the same language. And I love that. I love that about communities. Now, let's focus primarily right now on the formations that happen at the bottom of the chart. Nope, I like. Let's do it the other way around. We're going to go through bearish reversal patterns first. We're going to go through bullish reversal patterns second. We're going to track a reversal in the PowerPoint, and then we're going to pull up some charts. Okay. So the first ones we're going to go through, let's type in some stuff here. We're going to go through bearish reversals. Now, once again, how many reversals are there? You guys tell me, look in chat. How many reversals are there? How many do we categorize? What do you guys think? How many different reversals are there that we categorize? There are V shapes. Everybody type that down. Everybody write the V. Everybody write a V. I want to make sure you guys are there. I'm looking at you in the chat right now. Look at me. I turned my head. I'm looking at you guys. I can see you guys chat now. Everybody type the V. Okay. So you got the V's. Now W's. W and M. Now the W and the M. And then your head and shoulders. So you got the V, the M and the W, and V is either the V or the inverted V. You have the M or the W, and you have the head and shoulders or the inverted head and shoulders. Those are your major categorizations of reversals. Now, they might look a little bit different, but once you understand all reversal analysis is the relationship of momentum and pivots, you'll be able to track this a lot better on your own. Now, the first reversal we're going to look at here in terms of the bearish reversals is we're going to look at the traditional M formation. And so this one here is what we call the traditional M formation. Now, the M formation happens at the top end of a trend. You typically have a very consistent trend going. The first step we see is slowing momentum. So step one is slowing momentum. Once we identify that slowing momentum, it puts the reversal on our radar. The second step is resistance holds, thus showing you that buyers don't have the same degree of control that they once had. Third step is it comes down into support. Once it comes down into support, nobody has an edge here. Now, once again, if support increases here, ladies and gentlemen, does somebody still have an edge? If support increases, that somebody, i.e. the bulls, they still have that edge. And so it's important to note that resistance has to be horizontal. Support is also horizontal. As you can see, it creates the M formation. Now, within the M formation, here's something that was taught to me in a class. It was the first class I ever attended from a trader's perspective. I was 27 years old, and I was attending a class called Master Trader. And in that class, the instructor, his name was Mike Batty. Love Mike. He's such a good guy, still a good friend. Mike Batty taught me that you don't trade in the pattern. You cash flow in the pattern. Now, I want you guys to write that down. You don't trade in the pattern. Cash flow in the pattern. Okay? That's what Mike taught me. Once again, you don't trade in the pattern because you only trade when you have an edge. When you have horizontal resistance and horizontal support, nobody has an edge. Nobody does. You're playing within the bands. We want to trade with an edge. We want to trade with the bulls, not against the bears. We want to trade with the bears, not against the bulls. Does that make sense, guys? Think about that. That's Mindset 101 for traders. We don't want to trade against somebody. We want to trade with somebody. And so in terms of that edge, nobody has an edge in the reversal. We cash flow in the reversal because the reversal doesn't take 3 days. Remember, these are pivot relationships. To have a pivot, you got to have at least 6 trading days. This takes time. 3 up, 3 down, that creates the pivot, or 3 down, 3 up, that creates the pivot. So you can't shorten that time frame. That time frame is going to take the amount of time it wants to take. We don't trade within the pattern. We trade when it breaks the pattern. Now, when you're looking at this, you have step 1, the slowing momentum. Step 2 is the double top. Step 3 is the double bottom. Once again, step 4 is that violation of support right there. Once you violate support, that's the confirmation of the bearish downtrend, and thus now bears have an edge. Step 5 is the first bearish retracement, and that is called the KOD. And so step 1 is over here, slowing momentum. Step 2, the double top. Step 3, the double bottom. Step 4, the violation of support. Step 5 is the kiss of death. And that, my friends, is the M formation. It's one of the purest reversal patterns out there. There's no doubt about that. Now, let's understand now the head and shoulders formation. Now, the head and shoulders formation to me is one of my favorite reversals. Okay. And I also think it's one of the most powerful reversals out there. Most traders will point to the M formation or the W formation, and I think they'll point to them, quite frankly, because they're easier to identify. And also, I think, actually, I don't think, I know. The W, which stands for winner, and the M, which stands for murder, people like teaching them more because they're more easily understandable. But to me, the head and shoulders formation and the V formations are some of the most powerful formations out there. And I actually think they're a little bit more, they have more momentum to them. And as you guys can tell on how much I talk about momentum in trends, stocks, candlestick analysis, momentum is a very important analysis for me as a technician. And so when you're looking at the head and shoulders formation, once again, you have a series of higher highs, higher lows, higher highs, higher lows. Now, what we typically see, and one of the reasons why I like the head and shoulders formation a little bit more than the M formation, is I feel you can spot them a little bit quicker. Because the first step in the head and shoulder is the slowing momentum versus the M formation, it's really the double top. And so when you're looking at the slowing momentum, here's where I love the analysis. And here's what separates real technicians, quite frankly, is because real technicians, they can spot these reversals. They can spot continuation patterns simply because of the relationship between pivots. Now, I'm not here to teach retracements, but it is helpful to understand the levels of retracements within reversal analysis. When you have a shallow pullback, such as that, when you have a shallow pullback, it's actually a very bullish formation, right? The bears are, it's not even bears. There's no bears there. It's literally just profit taking, just a little bit of profit taking. That's all it is. A deeper level of retracement is something completely different, something completely different. When you see those deeper retracements that were preceded by a slowing momentum in trend, you're already in the reversal, but most traders don't know it yet because they still have an increase in support. Simply because they have that increase in support, that's what they're fixated on it. And remember what I said, guys, we're trained in pattern recognition. And the number one thing I believe in is support. Well, if that support level increases, most traders are going to see that as a bullish sign. Not me. I see that as weakness. I do. I see that as weakness because in my mind, if the bulls really still had control, they would have confirmed on the 9 EMA. If the buyers still had control, they would have pounded the 20 SMA. And then if the buyers still had control, they know what happens outside of a 61% retracement on the Fibonacci. There's no more control there. And so when you see that deep level of retracement, what that tells me is the buyers have lost all control. And so, yeah, the first thing we look at in the head and shoulders, and again, I'm kind of geeking out here, guys, because I love the head and shoulders. There's so much to it. But when you're looking at the head and shoulders, it first starts with an increase in resistance. But what is transpiring in the increasing resistance is your slowing momentum in trend. And so you have that increase in resistance. You also typically, not all the time, it can very easily come down into horizontal and wipe out that motive wave. But you also typically do see an increase in support, but you have this deep retracement. You have that deep pullback. And again, when we get into V-shapes, you'll understand why the deep pullback is that important. But in terms of this, step one, we have the slowing momentum. Step two, you start to see the double top. Now, the double top here, and again, this is reason number two why I like the head and shoulders slightly more than the M formation from a technical edge perspective. If it was an M formation, it would come all the way back up into resistance and it would do that type of number. Well, in the head and shoulders, it can only muster that. What happens is you decrease resistance. So you start with the slowing momentum, you then have a deeper pullback. You have a right shoulder that decreases against the previous level of resistance. So in the M formation, at this stage in the reversal, this is what an M formation looks like in the exact same stage of the reversal. That's the exact same stage in the reversal. Okay. Now, on the top side, you have the M. On the bottom side, you have the head and shoulders. Both very powerful reversals. Which one has better control by, let me ask a different way. Who has the edge in the M versus who has the edge in the head and shoulders? What do you guys think? Who has the edge here, ladies and gentlemen? I see a lot of you typing in. And this is where YouTube is a little frustrating. There's a little bit of a 20-second, 15, 20-second delay. But who has the edge in the head and shoulders? Bears. Vanessa, that's absolutely 100% accurate. Bears have the edge. Okay. Bears have the edge. Bulls are gone. And that's why a lot of people who wake up to reversals, they're already well behind. In the M, remember what I said, nobody has the edge. In the M formation, nobody has the edge. You have horizontal R and you have horizontal S. You have basically a neutral pattern. That's what you have. There's no edge there. In the head and shoulders formation, once again, it starts with slowing momentum. But remember what I said very, very, very early. When you're tracking the reversal, it's really a relationship between the pivot points. And it's the pivot points of resistance and support which tell you who has the edge. Well, if all of a sudden you see this resistance and all of a sudden it contracts based on the deeper level of retracement, bears have the edge. You already have a bearish downtrend. Traders just haven't woken up to it yet. Now, the confirmation is what we call the violation of the neckline. Now, the neckline can be that number or it can be that number. It just depends on if we have a horizontal or if we have a slight increase in support. But that is the edge, is when it violates that neckline right there, or if we do get some degree of horizontal right there. And again, it just varies based on the stock, but that's what we're looking at. Left shoulder, head. Right shoulder is a decrease in resistance. It's also your first decrease in the reversal formation. And then ultimately, once it violates support, that is what we call confirmation. And so you have the M formation. You have the head and shoulders formation. The last formation of a bearish reversal is what we call the inverted V. Now, the inverted V is basically an opposite of a V formation. It does look like that. And here's the killer part of all levels of technical analysis, but specifically in terms of V shapes. The V shape really doesn't have any momentum to it. It's an immediate reversal analysis, which basically comes all the way back down and then violates. And so there's a lot of similarities between the head and shoulders formation and the V formation to the right side of the chart. The difference is the left side of the chart. The head and shoulders formation will take a lot more time to go through the analysis than the V shape, as the V shape is typically based on something happening out there. You see an increasing volatility. A lot of reversals actually have slowing momentum, a reduction of volatility. In the V shapes, you typically see an increasing volatility, and a lot of it is based on some type of immediacy from an analysis perspective. For example, we're entering into earnings season. And for many of you out there, earnings season is basically, it's a crapshoot a little bit, and it can drive price action one way or the other fairly aggressively. Well, if the market is doing this type of number and earnings come out, it can do that type of number very quickly. And so, or when you get like a geopolitical situation, you can see V-shape and inverted V shapes fairly quickly. But again, they're tough to catch. They are tough to catch because a lot of times they're due to some uncertainty. They're due to an immediate change in direction based on an underlying fundamental reason, an underlying economic reason. There's a lot of variables that can create it. But Vanessa, honestly, I'm to the point in the reversals in terms of the differences between head and shoulders and V's, that honestly is just the volatility skew. That's how I personally see them, Vanessa. I do not see head and shoulders and V's that different. The difference is the volatility is a little bit hotter within a V shape than it is a head and shoulders. But if you track the right side of a head and shoulder formation, it looks extremely similar to the end result of a V formation. It just doesn't typically have the slowing or the increasing momentum previous. And so once again, a lot of times in reversals, whether it's M's or head and shoulders, you will see a slowing momentum impact before the reversal analysis. in V shapes, it's typically based on an increasing volatility skew based on some uncertainty that is now becoming certain, such as an earnings or such as some geopolitical situation, an economic report, but they're very, very, very similar. And Vanessa, great catch on that. And I'll tell you, it took me about 6 months in analyzing these until I had that light bulb, Vanessa. And I was like, honestly, and now I can't not see it, Vanessa. Truly, I can't. Like every time I see a V versus a head and shoulders, the only difference is the volatility on the right side of it. That's the only difference. Now, in terms of the bullish reversal formations, and before I draw some and then we'll track some, I want to ask you guys a question. Is trading and investing a short-term game or a long-term game? What do you guys think? We might be in a trade for 2 days. We might be in a trade for 2 minutes, but it is a long-term game. It is a long-term game. You never want to put yourself in a position to not be in this game long-term. And typically when people do that, it's because they're chasing gains, they're chasing analysis, they're chasing volatility when they should be patient and let it come back to them. They're over position sizing, they're over trading, they have gambler mentality. But trading should be a long-term game, a long-term game. Now, the reason I say that is many of you know the damage, and I mean that, the damage to certain stocks over the last 6 to 8 months in aggressive areas of the market, growth areas of the market, cyclical areas of the market as well. For example, I can name 100 stocks off the top of my head that are in significant downtrends, and most of them are tied to, and when I mean significant, guys, I'm not talking Apple that is 5% off the highs or Microsoft that's 10% off the highs. I'm talking about stocks that are cut in half, stocks that are 70% off the highs. We were looking at a stock today in the halftime report on Shopify. It's on Coach Mark's radar. Why is it on Coach Mark's radar? Because it's down 60% in the last 3 months. That's why it's on Coach Mark's radar. He's a deep value type guy. Well, there's also significant opportunity in that. And so my question is this. I know the environment we've been living in the last 6 months, it has not been the easiest trading environment in the last 6 months. But how many of you guys are excited for the potential reversals coming out of the damage that has been the market over the last 6 months? Like legitimately, how many of you are excited about that? In fact, I'm sure many of you have taken losses on those positions, right? I know many of the coaches have, absolutely, 1,000%. But I'm personally excited about it. I am. I'm personally excited about it. I think there is coming up over the next year, and before somebody out there is like, oh, if I blink, I might miss them. No, they're going to be happening a lot over the next year, guys. You're not going to blink and miss them, right? And especially if you're watching the halftime report every day, if you're attending the coaches show every Tuesday, if you're in Cash Flow Club on Thursday, if you're in the Traders Lounge Monday through Friday, if you're watching any of our scouting reports over the weekend, guys, we're going to be all over this stuff with our community. If you're in Discord, right, we're going to be all over this stuff. That's what a community is for. So Vanessa, don't be afraid to miss some. It's not about you. It's about the collective, right? It's about the community. We got to be familiar. We got to be aware. I don't even scan for myself anymore, guys. We have a community that does a lot of that. We share ideas. And again, it's not about, oh my goodness, here's this one moment in time. And if we don't nail this one moment in time, we're not going to have any opportunity for the next 10 years. That is not what this is. Reversal analysis at the bottom takes a lot of time, which gives you a lot of time so you don't miss it. Does that make sense, guys? So don't worry about missing it. Worry about having an understanding to take advantage of it when you see it. All right, now, and I want to, real quick, I want to talk about that. We miss opportunity all the time, guys. There's 1,000 stocks out there right now that are extremely liquid that I guarantee some are setting up on a bull or a bear that we are currently missing. There is opportunity as you guys are watching me teach reversal analysis. There is opportunity happening this very second in the futures market, in crude oil, in gold, in Bitcoin, in the S&P 500, in every instrument around the world that you are currently missing right now, this very second. There is opportunities from a business, a real estate perspective, a commodity perspective that are happening every second of every day around you, more than you could possibly count. You have no clue how much opportunity you miss. And because you miss so much opportunity, you shouldn't fear it, because we're all very good at it. And I hope you guys understand what I just said. It happens all the time, guys. Don't fear missing something. Be aware of it so that we can take action on it. We're in a community together. We will help. Get excited for it. Don't fear it. Get excited for it, because these opportunities are just that. They are massive opportunities to pick up quality stocks at the low prices. Now, I said that because we're going to be looking at some bullish reversals here in a second. Okay. And that was my way of teaching you that we don't have to just jump, because these things take time. A reversal does not happen in a day. In fact, a reversal cannot happen in a day. To have the minimum time frame in a reversal, think about this for a second. To have the minimum time frame in a reversal, you have to have, in a reversal outside of V-shaped stuff, I'm talking traditional reversals, you have to have at least 4 pivots. To have 4 pivots, I need about a month of data. We got lots of time, guys. Okay. Don't fear missing something. Okay. It doesn't happen in a second. It gives us plenty of time in that reversal. Now, the bullish reversal patterns out there are as follows. The first one is the W formation, the polar opposite of the M formation. We have a bearish downtrend. We typically see, as the market is coming into support, a little bit of slowing momentum. You have a standard retracement. It comes down, double bottoms and double tops, creates a horizontal. That wasn't exactly horizontal, but you get my drift there. It creates a horizontal level of support and resistance. The signal, so that we don't miss it, is twofold. And the W's are extremely traditional. W's are there. Again, head and shoulders is my favorite reversal pattern, but I'm splitting hairs there on a lot of the reversal analysis. When you're looking at the trading signal here, you always, in every version of trading, whether you're talking about day trading, swing trading, position trading, or investing, cash flow or delta, it doesn't matter. For every version of trading, you have aggressive methodologies and you have conservative ones. Well, an aggressive entry into reversal is to identify the W, identify the resistance level. In this example would be 105 here, and then to trigger upon the breakout. And so, as you can see, bearish downtrend, lower low, lower high, lower low, lower high, lower low, lower high. All of a sudden, we hold support here. We equal resistance. Once it breaks out here, that's the confirmation. But that's aggressive. You're aggressive because you're getting in on the first opportunity you have. Your opportunity is not at support here, because I can promise you something. When this market, let's go back a little bit of time frame here. Everybody wants to pick up the low price. Everybody does, always. They want to pick up the low price here. And they tried to buy there and it failed. They tried to pick up the low price there, tried to buy and it failed, right? What are the traders looking at doing right here? Just at the double bottom. No double top, no W, at the lower level of support. What are traders looking to do here, guys? Are we looking to buy or sell? We're looking to sell. We're looking to short under support. Look at AMD under 100. We're looking for confirmation under that support level. Okay. Now, when it does that, the picture changes. The pattern changes. The relationship between the pivots are changing. And if the market is changing in front of my eyes, isn't it telling me something? If the relationship between the pivots are now, we're going down, equal, now up, isn't the market trying to tell me something? Because the market, whereas consumer America is focused on what is happening in their lives, the market is focused on what's happening in the market 6 months from now. So it's the market trying to tell me something. It's the market telling me that we're seeing something different and I need to pay attention to that. And so at this point, we're seeing the relationship between the pivots change, but it is not. And I can't say this stronger, ladies and gentlemen, it is not until confirmation that that actually occurs. Once you break out of resistance, that is now a bullish uptrend. And then the confirmation of that trend is the first increase in support after the violation of the W. And so you have so as you're going through this step by step, you have the slowing momentum, double bottom, double top. You violate resistance here. That drives an increase in R for the first time, mind you, an increase in R. That's resistance. The confirmation is the kiss hello. That is the increase in support. And the first increase in support following a violation of the reversal analysis. Now, Moto, 1000% agree. It's not a bottom until the pivots occur. And that's why understanding the relationship between the pivots is so vitally important. Vanessa, that's a great question. Vanessa asks, and let's go back here. Now, it's one of them. Yes, Vanessa, it is one of them. But again, remember this in terms of trading and investing, there are always conservative and aggressive ways to get into a position. The aggressive one in terms of getting into something is on the breakout. It's when it breaks out of resistance right there. When it breaks out of resistance, that is your first step. And that's an aggressive entry. And again, we've seen recently these, like I remember I was looking at one of the trades of the week about, I don't know, it was about a month ago. It was a bullish reversal on Penn National Gaming. It never confirmed the actual reversal, but what it did is confirm a trigger on a reversal and then got smoked right back down. And we've actually seen that occur quite frequently over the course of the last couple of weeks as the market's trying to figure out what it wants to do next from a trend perspective. We've seen a little bit of fake outs. Okay, that's aggressive. And so when you're entering in on the breakout, you're being extremely aggressive, and you know that. You should, if you ever buy the breakout of a W, you're the most aggressive trader there is. You need to know that. Well, the more conservative trader would say, let me get that pullback. Let me get that next pullback, and that next pullback with the increase in support, that's where they're looking at to get into. And so they're not looking to get the breakout. They're looking to get the confirmation of the entire trend, which is the first increase in support. If that helps, Vanessa. Oh, confirmation. No, front running breakouts would be the third one. No, I kid, Steve. I kid. But no, confirmation is extremely important. I don't know. It's like my kids. I got 4 kids. Sometimes my youngest is my favorite, and sometimes my oldest is my favorite. It really just depends on which one's asking me at the time. And every parent understands exactly what I just said. And one of my children is literally the host on this. And Tanya, you're my favorite, and I love you because you're here and you're listening to my voice right now. But Stephen, that's kind of like the concepts of technical analysis. I love them all. Like, I am a technician in my heart. It's my number one principle. And so, yes, momentum and support, those are 1A, 1B. But 1C, like, it varies. It depends on the day and the time of the day and what stock I'm analyzing. There's a lot I do love about technical analysis. There is not, I tell them that, Vanessa. I love them all very, very dearly. All right. So in terms of the W, that's what we're really kind of tracking. Now, once again, I'm going to draw a head and shoulders, and I'm going to draw a V shape, and we're going to kind of understand them simultaneously. Now, once again, when you're looking at the head and shoulders formation, typically speaking, we see some degree of slowing momentum. You also have typically a deeper level of retracement, and then you have an increase in support. That is your head and shoulders formation. Now, the V shape. Okay, now, the only difference between the V and the head and shoulders is not from this point. It's almost identical, like legitimately. I've studied this a lot, guys. It's almost identical. It's what transpires on the left-hand side. That is the difference between the V and the head and shoulders. The difference is the head and shoulders has more time. It has less volatility. It typically tracks that reversal of slowing momentum and whatnot. Whereas the V is typically an increasing volatility based on some degree of uncertainty becoming certain, such as an earnings report, which immediately changes the direction of the trend. And so here, if all you're looking at, ladies and gentlemen, is from this point on, they're identical. Truly, they're identical. The V is just faster than the traditional head and shoulders. The difference is the left-hand side of the chart, which will track slowing momentum and so on and so forth. Does that make sense, by the way, everybody? The difference between the V and the head and shoulders? Matthew, love you, bro. 2 versus 3 pivots. Well, the V is, think about the V like this, guys. And again, I do think it's very important to understand V's here because they're happening more and more due to algorithms and the entire market freaking out constantly. Well, in terms of the V, whatever the trend is previous to the increase in volatility, it can be a downtrend. It can be a downtrend with increasing momentum. It can be a downtrend with decreasing momentum. It doesn't matter. The news comes out and you immediately start a bullish uptrend. That's the difference. Okay. That is the only difference, is the left-hand side it will be random. It'll vary. The trend was bearish. Now it's an immediate bullish uptrend. And by the way, many of you kind of heard us talk about bear stop out day. Bear stop out day is the V-shaped recovery. So when you're looking at a V-shaped type market, everybody's looking to short at resistance. Well, it breaks out of resistance. And again, you're seeing a kind of a head and shoulders there. I can draw a million of them. I can't stop drawing the exact same picture because they're very, very, very similar. Once again, the differences are the left-hand side of the chart is more traditional on the head and shoulders. The V is due to some uncertainty becoming certain, such as an earnings or economic report or geopolitical event. And immediately you see a reversal analysis where you just see walking up the stairs, higher highs, higher lows. Okay. All right. Now, first of all, has this been fruitful for you guys tonight? Has this helped you understand reversal analysis and the pivots and the mindset of what we're trying to go through in terms of reversals? And by the way, those of you who are very new to tackle trading, we love trading. I think the only thing we love trading is, I think the only thing we love more than trading outside of our families is teaching. We love to teach. I can't turn it off, guys. I really can't. I mean, I'll be in the middle of analyzing a stock in a halftime report, and I'll be like, all right, I think the community would appreciate a little bit of detail on this subject. So really happy you guys are enjoying it. And if you like the video, guys, give me a nice like and give me a nice little share and tell somebody about it. Get that good word of tackle trading out. And honestly, if you have any questions for me after the webinar, we're going to get done here in about 5 minutes or so, guys. I really just want to focus on the reversal. Now we're going to go into understanding 5 minutes. My 5 minutes is 15 minutes. You guys all know that by now. But hit me up in Discord. Hit me up in the Step System channel. If you have any questions after this, hit me up in the general channel. And for those of you that are new to tackle trading on Tackle Trading's YouTube, we're going to open up one thread to our YouTube community for Discord. So even if you're not a pro member, there is going to be a thread in the Tackle Trading Discord for new traders and new traders only. And so if you have questions, you can ask there as well. I'll get that. Actually, I'll get the link and I'll post it in the halftime report tomorrow. So I don't have the link off the top of my hands. I'll get it and I'll post it in the halftime report here tomorrow. Now, let's get back into spotting that bear market. Okay. Now I want to walk you through the process of the reversal again. Okay. To kind of come back full circle here. What's step one? Step one is slowing momentum. Obviously, we're tracking a bearish reversal here, so we're tracking an M formation. So step one is that slowing momentum. Now, this is actually a screenshot from the S&P 500's, not the latest reversal. We'll look at that here in a second, but one from the subprime meltdown. It's one of the most consistent reversals I've ever seen, and I use it as an example in teaching reversal analysis all the time. I wish you guys were with me as we were tracking that reversal back in 07 and 08. It was so textbook, just so textbook. Well, it first started with the concept of slowing momentum. As you can see, we're tracking R1 to R2 to R3. R1 to R2, you see an increase of 135 points, and you see an increase of 95 points. The market's still bullish. It's just losing momentum. It's losing a little bit of steam. Step two after the slowing momentum, which really kind of ends the bullish uptrend, would be the confirmation of the double top. Resistance thus holds. You see that happen right there. Step three, which creates the neutrality in the reversal, would be the double bottom, which is now horizontal support right there. As you can see, creates that nice little M formation, and the M stands for murder. It does, because the market's about ready to go down. Step four is the violation of support. As you can see right here, market violates support, volatility picks up on the downside. Very honestly, it's one of the most textbook reversals I've ever tracked. Step five is the most powerful technical formation in the market. The first retracement after a violation of support is called the kiss of death, ladies and gentlemen. And after the kiss of death, what transpires next? Everybody and their dog. And I want you to think about this from a psychological behavioral perspective. Again, most people are not trained assassins in the marketplace. Most people are just normal, everyday individuals trying to navigate the market without an understanding of how the market actually functions. And so while the market is here, they don't know it. They're thinking the market's still just bullish. They're adding to portfolios versus what traders and people that are in the know are doing. They're reducing the portfolio. But what transpires in the kiss of death is everybody wakes up to what's happening out there. Markets are no longer up. People aren't hoping anymore. People are giving in to the bearish analysis. They finally wake up and look at their 401k, and their 401k is not necessarily where they think it should be. They get a little concerned. Traders jump on, the algorithms jump on, everybody hits the sell button, and you see a market that just goes vertical, not vertigo, Christian, vertical. But same thing transpires. Look at that downward movement in price there. Once again, you're tracking slowing momentum, double top, double bottom, violation of support, KOD, kiss of death, and you see a market that just gets absolutely just smoked there. And this will occur to the downside until the opposite occurs, and we just rotate with the market. Once we see that slowing momentum here, double bottom, double top, breakout of resistance, yin and yang of the marketplace. Now, I have thoroughly, you need a Vulcan mind melt? I watched the first episode of Picard season 2 model. I am ready, brother. I don't know if I'm as good as Spock though. I don't know if I'm that good. I can't do the Vulcan mind melt. But what I can do is just kind of teach you the same things that were taught me over years and years and years. So you stay with us, Motto. We'll get you up there, brother. All right. Now, guys, what I did is I found a couple reversals in the marketplace. And I just want to go through these with you guys just to kind of understand how I see them. And I'm not going to do them all. But I'm going to do a few of them. Now, again, do not fixate on earnings. Everybody at Tackle Trading knows the importance of earnings. This is not this conversation. We're tracking reversals. Now, obviously, I would not be showing these things if they were not in some degree of reversal or trying to teach very valuable lessons, okay, which I do have a tendency to teach very valuable lessons sometimes. What is this? Now, it can only be a W, head and shoulders, or V. Which one? What do you guys think? Again, We're pulling up and you guys are telling me, based on everything we taught tonight, what type of reversal is it? Is it a V shape? We're looking at Sherwin-Williams, specialty chemicals coming back online in the market a little bit. One of the reasons why we're so excited for basic materials. We love gold. We love metals and mining right now. But if those specialty chemical companies kind of attach themselves to the bullish theme that's happening in materials, we kind of like it. This, ladies and gentlemen, is what we call a V-shaped recovery. Now, remember, the V-shape versus the head and shoulders. Good job, model. You had that mind meld, model. We just did it, brother. We just did it. We took this brain model, we put it in your head. I love it. It is a V shape. Look at the V, guys. Look at the V. Now, again, H and S V's, I'm splitting hairs, right? Some of you might be looking at that. Some of you might be looking at that and saying, I see the head and shoulders. Others might be looking at that and see the V. I technically would consider this a V shape. And the reason, very simply for me, and again, I'm not saying, because this one's a little difficult. This one I easily could put into the head and shoulders camp. Okay. I don't see this 2-day price movement as a pivot. This right here. And again, you guys know how technically consistent I can be, to the point of annoyance sometimes. But a 2-day rally is not a pivot point, which means I see that entire movement as one wave down, which puts that in the V-shaped recovery. Does that make sense, guys? And again, we're splitting hairs there, but I put a lot of relationship on those pivots. That is just a little bit of a shakeout couple days here. I see this as a V-shape. Now, whether it is Matthew who says it's a head and shoulders or me who says it's a V-shape, aren't they kind of identical on the right side though? Regardless of how we see the left side, are they kind of identical on the right side? And that's what I love about the two patterns, is it's really not the trading. Now, once again, we're back up above all your moving averages. That puts that into the V-shaped recovery, which is ending this downtrend over here. All right, now let's go to the next one. Let's do it again. Ecolabs. What do you guys think? Now I'm gonna rapid fire this. This is another V shape. It's another V shape. You got a constant increase in upward movement price. Very similar to what you're seeing on Sherwin-Williams, by the way. Very similar to what you're seeing on Sherwin-Williams. 2-day hiccup here, not a pivot point. That's V shape. Okay. Next, Otis. See now, Otis here. This is more of your traditional head and shoulders formation. Okay. Now, when you're tracking this reversal on the Otis, you got that pivot point down there. I'm just going to draw it right there, though. You see that head and shoulders there? Look at this. See the slowing momentum in trend? Look at that on Otis. See the big downward movement price follow the slightly lower downward movement price? Do you see how the V shape looks like a V2 versus the head and shoulder has more time correction in it as well? It's a little bit, remember, V shape had a little bit more volatility in it. Head and shoulders have a little bit of a reduction in volatility. Look at the neckline right there. You also have the 50-period moving average right there. Very traditional head and shoulders short-term formation here on Otis. I like that head and shoulders formation. Has it confirmed? Still working through the analysis. Still working through that analysis on Otis. Let's go ahead and take a look at Monster Beverages here, ladies and gentlemen. This is bear stop out day. Big downward movement in price, immediate V-shaped recovery, recovers all your moving averages, and then bear stop out is the deep retracement that creates the V-shape at once you violate resistance, upward movement in price should occur. Monster, put right there into the V-shaped recovery. FIS here, a little bit of a head and shoulders, a little bit of a head and shoulders formation. Snowflake here. This is V-shape. You see the big downward momentum over here? Let's take that line off. Big downward momentum. See the V-shape coming up? Well, what's transpiring here? Right there. A little bit of an increase in support against the very low price. Downward movement with momentum. Bear stop out day would occur right here. 250 would be the confirmation on Snowflake. A little bit of a choppy reversal, but there's a lot of chop in the market right now. Adobe here. Let's take a look at Adobe here. A little bit of a traditional W formation here, ladies and gentlemen. This is our first W formation of the night. Nice little W formation. Look at that. It's never textbook. Well, actually, it is textbook every now and then. Nice little formation. Where would confirmation be? First confirmation would be above 475. Secondary confirmation would be the kiss low after the violation of resistance, followed by a bullish retracement at that point. 475 is the number that all starts at, though. Nice reversal in Adobe happening. Let's take a look at Intuit. What do you guys got this one at? I got this one as a head and shoulders. I like this head and shoulders on Intuit, actually. When you're looking here, left shoulder, head, right shoulder, horizontal resistance at a significant whole number. By the way, this is why we were so excited about that first go around here a week going into it. Nice reversal analysis. Then all of a sudden the market just got to fake out and give us all a headache for a second. Well, does that change us from doing again on a breakout of 500? No, it does not. Traders have a very short mindset, or a short mind from a historical perspective. We like to do it again and again and again. I like that head and shoulders there. I like it a lot. When you're looking at a couple others, here's Unity Software. This is one of those stocks that got slaughtered over the last 3-4 months. Tracking a head and shoulders formation. Look at the slowing momentum and trend, increasing in support, horizontal resistance at 110. Nice reversal on Unity Software. Disney. I pulled up Disney for one reason. It's not reversing. Disney, reverse. And to have a reversal, we have to start with support holding. But again, the difference in reversal analysis versus continuation is not just support, it's the relationship of resistance. You see a decrease in resistance here? Horizontal support, decrease in resistance, bears still have control. However, what if Disney does this number? And maybe I'm hoping here, Disney, come on, Disney. What if they do that number? Deep retracement comes into that horizontal resistance level. Give us one of those numbers. Start shaking out that resistance level. But it all starts with slowing momentum and a double bottom. That's what Disney is doing right now, but it's got work to do. It definitely has work to do in that choppy reversal. Netflix here. Netflix here. Look at that head and shoulders, guys. Got to hold support at 350. Got to hold support, make that run into 400. Really nice. But again, tracking a little bit of reversal in Netflix here. Spotify, head and shoulders. Look at that pivot confirmation. Look at that shakeout. 1, 2, 3, 4. Shakeout down. Slowing momentum on the downside. Increasing support on the right side. Horizontal resistance at 160. This is a head. That's a left shoulder. That's a head. That's a right shoulder. That's the knees and toes. And that's a breakout against 160. Like that on Spotify. Snapchat. Let's look at Snapchat. There we go. Snapchat. Double bottom. See the double bottom? Double bottom. That's Facebook day. That's Facebook's earnings. That's Snapchat's earnings from last quarter. A little bit of a horizontal W formation, working its way into $40, increasing support. Keep an eye on this earnings. You break 40 on that earnings, that's a bullish uptrend. And that is also Tackle Trading 101, Art of the Reversal, as we spent the better part of the last hour and a half or so going through reversal analysis. And like I said at the very beginning, guys, I had a blackboard and I had an Epic pen. There's no way I'm keeping it under an hour. If I have a blackboard and an Epic pen, I don't care what the topic is. I'm gonna talk for about an hour. Went for about an hour and a half. I really hope you guys loved the webinar here today. I really hope anytime I have an opportunity to teach on our YouTube channel or within our community in general, I really enjoy it. I love hanging out with you guys. I love being in the Discord channel. You guys are absolutely the best part of tackle trading. And if you love tackle trading and you love the webinar here, go ahead and give us a like and a share. Tell somebody about it. Let people know how amazing tackle trading is and how much they're going to learn from tackle trading. And as you start that learning process, why don't you go over there to tackletrading.com, take a 15-day free trial and test out everything we do at tackle trading. Our number one value is education. We love teaching. We love putting teaching into absolutely everything we do, but it's to help people actually trade out there as well. So we got education and we got application, and you get it all, and you can get all of it for free, legitimately free. 15-day free trial, bit.ly/join tackle pro. Become a pro member of Tackle Trading. And with that pro membership, you can get a consultation with the amazing Coach Frank, who will walk you through the onboarding. You're going to meet Emily, Coach Tim, and everybody else at Tackle Trading. And when you're ready to level up outside that 15-day free trial and start getting into coaching and start doing this making this more of your life, you can also have an opportunity to set up a consultation with Coach Tim or Coach Emily. Everybody here, if you need to sit down with one of my coaches, it's available to you at any time. You just let us know. We'll sit down with you guys and go through whatever you need. If you're looking for education, if you're looking for coaching, if you're looking for a systematic education, go to tackletrading.com/schedule-consultation, and you can get to a calendar where you can set up a 30-minute consultation with either Coach Tim, Coach Frank, or Coach Emily. These are all veteran traders and veterans of tackle trading. When you talk to people at Tackle Trading, you don't talk to customer support. You don't talk to salespeople. You talk to traders. That's who you talk to. You talk to, literally, Coach Tim's an owner of Tackle Trading, one of the most valuable members of our coaching staff, including myself, and he does those consultations. So you get to talk to traders. Talk to us. Let us know what you need. I promise you, we can paint something for you, and you can get a free consultation from any one of my coaches at Tackle Trading to build those educational plans for you at tackletrading.com/schedule-consultation. And you get some free trading journals if you do it. And that's for new members of Tackle Trading. So if you need some trading journals, and I promise you, we got some amazing trading journals. The cash flow journal, the theta research guide, the tackle trading journal. You can get some free trading journals just for attending a consultation and talking to a bunch of cold-blooded killers we call traders and coaches. Sounds like a good opportunity to me. Definitely check it out. I love you guys. Team Tackle, you are absolutely the best. If you have any questions for me at all, hit me up in Discord at Coach Matt. You can tag me in Discord. Typically speaking, the general thread in our Tackle Discord, or the one I live in, the step system one, that's our short-term trading one. So whenever you see the word step in our Discord, that stands for stop loss, target, entry, position size. The step system is our swing trading course. It's our swing trading system. I'm constantly in the step system thread. Hit me up in the step system thread if you have any questions on anything technical analysis or anything we covered here in the webinar tonight. You guys are the best. I'll see you tomorrow on the Halftime Report.